US equity markets made some marginal gains overnight. Consumer confidence for November has improved once again, and housing prices seem to be back moving in the right direction. Both of these will be positive for the US economy. Meanwhile, Asian stocks have edged back once again overnight. They have been in a mini slump for just on 2 weeks now after China announced that they may need to start cooling off their economy. Any cooling off in China could mean that we see weaker demand for our food export products. With this in mind, the New Zealand dollar did track back just slightly overnight, trading back under 71 cents against the US dollar. A report out overnight indicated that our largest lamb export market has emerged from recession by the slimmest of margins. The UK expanded by 0.1% in the last quarter of 2009. This is much lower than many were forecasting and has now brought into question plans for the government to pull back on their spending. The UK economy is still very weak and is likely to need government support for some time yet. All up, the UK contracted by 6%, was the last group of 7 country to emerge from recession, and is likely to see only around 1% growth rate in 2010. The British pound did weaken overnight after their disappointing economic growth report. A continuing weakness in the pound is really proving to be a problem for our own New Zealand lamb prices. Higher prices in Australia and record shelf prices in the UK are not being transferred back to scheduled prices here in New Zealand. As slaughter does begin to ramp up towards the end of this season, we are likely to see further pressure applied to our own scheduled prices. We are also unlikely to see any big change in these schedules until the pound does weaken, and this is likely to be some time yet.